Hello everyone, welcome to the Elliottwave-forecast.com YouTube channel. This is Henry and today is Friday, October the 18th. The time is 3:30 a.m. GMT. So today we will be looking at the chart of the S&P. This is SPX 60 minutes chart right here. And we can see from this chart that this rally to 3021 ended with 1. And then this pullback here ended with 2 at 28.55. Now since then the rally looks to be impulsive. We can see 1, 2, 3, 4, and then now looking for with 5 to finish, with possibly one more push higher. Okay, and then from once it reaches once it finishes the 5 ways up, this is going to pull back in 3 waves to correct the cycle from 28.55 before the next leg higher again. So right here, as you guys know, the S&P and the US indices in the past 2 years has been sideways, right? Since topping out in the January 2018, it made 2 more marginal high, but then since then it has always been rejected. So it's in a way it's kind of sideways from the past 2 years, and we are also in that period of time when we definitely it's not bearish definitely, but at the same time it also does not really break to a new high in a convincing manner, right? In a convincing manner. Now if we take a look at this 1 hour chart here and we go to the larger time frame daily, so I'm putting this 1 and 2 here. Now if you can see right here, we've been sideways since July. We've been sideways so far. And then if you take a look at the even a bigger time frame, so let me show you, this is a weekly chart. Now again, like I said, since 2018 we're sort of making marginal high, but always fails to extend higher convincingly, like always getting rejected after making marginal high and so on. Momentum is also declining here, but there is no doubt that S&P, for example, still can make another high again, still maybe get rejected again from the same trend line here whenever it tries to make a new high. So there is a possibility of that to happen. All right, so unless it really decisively breaks above everything, then we can continue to be in this kind of a pattern here, like it can continue to make new high, but then at the same time it's not really as strong as the previous rally that we see since 2009 2016 right here. Okay, so going back to the shorter cycle, it's not easy to trade, to be honest. It's not easy to trade in this kind of environment, in this kind of situation. All right, because again, unless we fully break above everything here, it still is going to be choppy for now. Now if you take a look here in the 1 hour again, so what happens here is that at least in the shorter cycle, right, if we are talking about shorter cycle, then this view, it still has to be proven by breaking above 1 in blue, right? So unless we break 1 in blue, this is not guaranteed to happen. I mean, this can go lower again, for example, even though technically probably it's not going to happen, because the other indices that is more clear, the one that we had as a chart of the day in the previous week, in the previous couple of days, for example the Nikkei and the DAX, that one is clear that we do look for more upside. Now this one is not as clear. We have not broken above this previous one in blue. So at the least, if anybody is trading S&P, which is really, I don't think it's the best index right now, if we can break above 1 in blue, so at the least we are saying that okay, we can get extension higher to at least 30,055. all right, assuming, okay, let's assume this is some sort of an ABC, then the 100% is 3055, right? And if we can break above here, which is the July 29 high, then we can also look for a little bit more upside. So we can have these 3 swings right here, like this, right? And we can get to around 3,120. All right, if we can break above July 26. So for this view, then to really get confirmation, first we need to break above 1 in blue. Once we break 1 in blue, then we can get to 3055. And if we can break above this one, this July 26, then we can get to 3100, right? But you can see right here 3055, 3100. Let me see. So yeah, this ascending trend line here is around 3050, so may get rejected again there. And then this one is 3100, is going to be the apex of this, you know, converging channel here that looks like a wedge here. Okay, so that's what we are looking for here, guys, in the S&P. Again, cannot be bearish because it is not bearish. It doesn't have any evidence that it is bearish, and still can make a new high. And this one in blue needs to be broken before we get further confirmation that we will be extending higher, at least to 3055 next. Okay, so hope that this is clear, and if you do like it, please do like and subscribe our channel. And there is a 14 days free trial as well. The link is provided in the description of the video to check all the count for all the other instruments as well as the S&P in all time frames. All right, so have a good weekend, everyone, and see you all again next week.